What happens when Hollywood writers start getting paid to teach AI how to do their own jobs? That story says a lot about where this industry is heading. Welcome to the Automated Daily, AI News Edition, the podcast created by Generative AI. I'm Trent Teller, and today is August 23rd, 2026. On today's show, pressure is building around AI from several directions at once: creative work, public trust, enterprise control, and even the daily habits of developers. This episode is brought to you by 11 Labs. 11 Labs lets you discover the future of AI audio with cutting-edge voice technology. Find the link in the episode notes. Let's start with Hollywood, where the slowdown in film and TV work is pushing writers, directors, and producers into an awkward new side hustle, training AI systems to perform tasks that look a lot like their own jobs. That includes things like screenwriting support, production planning, and pitch materials. For many, it's simply a way to pay the bills during a rough period. But the moral tension is hard to miss. Some workers openly say it feels like helping build the tools that could further shrink creative employment. Why this matters is bigger than one industry. It shows how AI adoption often advances through economic pressure, especially when workers feel they have no real alternative. That broader backlash is now showing up in a financial story around AI too. In a new development in the Anthropic story we've been following, the company's expected IPO filing is likely to flag public opposition to AI and data center construction as a real business risk. Investors are reportedly asking hard questions not just about competition and margins, but also about what happens if the physical buildup behind AI slows down. That's an important shift. For a while, AI was mainly discussed as a race for better models. Now the constraints are becoming political and social as well. If communities and regulators push back harder on the infrastructure AI depends on, growth projections and valuations could start to look a lot less certain. That connects with another update on public sentiment. New reporting suggests trust in AI remains weak, and trust in the people leading the industry is even weaker. In the US, concern still outweighs excitement, especially among younger adults. In Europe, people appear somewhat more open to possible benefits, but they also want tighter rules, stronger privacy protections, and more transparency. The message is fairly clear. Many people see AI becoming more present in daily life, but they still don't feel the upside personally. What they do notice are the risks, especially around jobs, misuse, and the use of human-created work as trading material. That trust gap could become one of the defining limits on how fast AI is adopted. We can also see that tension inside organizations. In Australia, an AFL employee resigned after being told she could not opt out of a Microsoft Copilot rollout. She had objected on ethical, environmental, and privacy grounds, and the league held its position. This is the kind of story companies should pay attention to. AI resistance is no longer just a public policy issue or a social media debate. It's becoming a workplace issue about consent, trust, and whether employees get a say when new systems are introduced into their daily work. Even when a company believes its deployment is compliant, that does not automatically mean workers feel protected or heard.
In the enterprise market, the argument over who controls AI is getting sharper. Palantir CEO Alex Karp is once again taking aim at frontier AI labs, saying businesses should not have to give up control of their data or intellectual property just to use advanced models. His pitch is that companies should keep sensitive information in-house and build AI on top of that, rather than become dependent on outside model providers. OpenAI and Anthropic, of course, say customer data is protected and not used for training unless users opt in. But the reason this debate matters is that it goes beyond marketing. It gets at one of the central questions in enterprise AI. Will companies own the advantage created from their own data, or will more of that value drift toward the model makers? On the developer side, AI coding tools are starting to look less like a clean productivity win and more like a mixed habit. A new report describes developers staying up late, continuing to prompt and review code long after they plan to stop, because the loop of partial success keeps pulling them back in. The problem is not just time spent. It's the extra burden of checking whether the output is correct, secure, maintainable, and actually suited to the codebase. Some are calling that verification debt. In other words, AI may generate code faster, but it can also create more downstream work and a more always-on feeling. If that pattern holds, the future of coding with AI may be less about effortless speed and more about managing fatigue and judgment. And finally, a useful reality check from the Linux world. Linus Torvalds personally tracked down and fixed an Intel graphics driver bug after a long and frustrating debugging session. He said AI helped with the repetitive grind, including adding debug code and working through results, but it also kept insisting the issue was effectively impossible. In the end, the actual fix was tiny. That's a good snapshot of where these tools are today. AI can be genuinely useful in narrowing a problem and handling tedious steps, but it still doesn't replace the human ability to decide what's wrong, what's noise, and what the final answer should be. Thanks to our sponsor, Consensus. Consensus uses AI to help you find and understand research papers, and you can get a free month. Find the link in the episode notes. That's the roundup for today. The bigger theme across these stories is that AI is no longer just a technology story. It's a labor story, a trust story, and increasingly an infrastructure story too. Thanks for listening to the Automated Daily, AI News Edition. I'm Trent Teller, and you can find links to all the stories in the episode notes.